Alright, good day guys. Today we'll be looking at GBP CAD, that's British pound against Canadian dollar. So what we are looking at it here, we are on the daily time frame, and you can see to it that market is market is pushing to the upside. And if you can squeeze it very well to see what's going on in the market, you see to it that all this while market has been trending to the upside, right? So looking at this, what we are going to be doing is we'll be looking at buy positions to push market upwards. So we'll first start by, there are a few things I look at whenever I want to make analysis or take a trade. The first one is market trend. The second one is the previous highs and lows. The third one is the last order block, right? That's if it's a downtrend, I'm looking for the last supply zone that market tapped in and then it's making waves towards downside. If it's an uptrend, I'm looking at the last demand zone that market tapped in and then it's making waves towards the upside. So looking at this one, let's see, our last high, this is the previous high here, right? And our previous low, it's somewhere here. Do you get? So the previous order block, right? Okay, let me say the previous structure that happened in the market as market is pushing to the upside. It's let's start from here. From here, market went to the upside, right? Created inducement here, pushed to the upside again. So a lot of traders now will see to it that market is moving to the upside, so they'll be taking their next trade around here, and then they'll put their stop loss below this particular zone here. So market went to the upside a little, came down to stop them, and that is to induce them, created inducement. Market now tapped on this other block that was here and then moved to the upside. All right, so what we'll be looking at is for market to break above this particular zone, come back to look for any possible entry around here, and then push back up again. Good. So looking at this, I hope you all will understand this because you are not beginner traders. So looking at this, what we'll be looking at now is the next possible order block, whereby we want our market to come back and test in before moving upside. So what we'll do here is that since market is here to break that particular zone, the inducement that has been created yet is this particular one here. Is inducement. So what we'll do now, see, if you look at this previous move, there is no clear imbalance, right? The whole thing is, sorry, I'm using free trading view, so that's how the adverts keep popping up sometimes. So if you look at this particular zone here, I'm coming, just hold on a bit. If you look at this particular zone here, you see to it that there is no inducement, sorry, there is no fair value gap, right? The whole place is congested. So when it comes to this case, how do we choose our order block? Let's delete it. In situations like this, is either I use my Fibonacci to mark this is a week. I will not mark on this week. I'll start from here where the move started, right? And then to the extreme end. Do you understand? But since this move is yet to be completed, the upside move is yet to be completed, the Fibonacci 2 is not the best option to use. But had it been the move is completed and then it's coming back to tap on the demand zone, you will use the Fibonacci 2 from the start of the trend to the ending of the trend. Then you mark within the 0.90%. So what we're going to do here is we'll check the last bearish move before the bullish trend. So this was the last, from here, from this place to down here, this zone here, this was the last bearish move before market pushed to the upside. So what we're going to do is that move is kind of too big, and then it's already, our inducement is already tapping on it. So what we're going to do is we'll check the last bearish candle. After this let me make it bigger so you understand better. After this bearish candle here, these are the two after this bullish candle here, these are the two bearish candles that collected the remaining liquidity and then pushed the market to the upside. So what I'm going to do is we are going to mark these two candles as our demand zone, right? So since there is no clear fair value gap, where if market reaches this demand zone, we are not going to use risk entries, right? We are going to wait for change of character, confirmation entry before we enter. So what we'll be expecting the market to do is we expect the market to, from where it is now, break above this particular zone, then push to the downside, right? Collect this inducement or liquidity or whatsoever, tap on this demand zone, then change character, that is break above this previous high, change character, come back to retest the demand zone on the lower time frame, and then what next? Starts moving to the upside. So this is what we'll be expecting of the market, right? So you all stay, keep an eye on this pair. Fuck, man, it's not easy for you. So you all keep an eye on this pair. This is what we'll be expecting. The markets today is already Friday. Market will be closing soon, but we are expecting